Let's check in now with pro trader Alan Knuckman, the chief market strategist at Paradigm, joining us from the airport today.
Hello, Angie. I'm here to remind you that stocks can't fly high every single day. Now, we did have a 20% 3-month run in the S&P. We saw a pullback on Tuesday. And yes, 70 points in the S&P is now 1.5%. The good news is most of that gap was refilled back on the upside. Let's see if we can get some more follow through, and we'll be up and away once again.
Your new trade is a tech ETF managed by investor Cathie Wood.
All right, our stock for today, it's the ARKK Innovation Fund, ARKK. It's Cathie Wood's innovation fund that has been beaten badly. It's 70% off its 2021 top. Now, it has bounced off its bottom here, and we've been trading between 35 and 55 for one full year. So this 45 level is an important midpoint pivot for a pop back to the range top, and then a breakout of our range targets a big move up to 75.
What can you tell us about the chart on ARKK?
So the stock is 50% off its 2023 low. It's got positive leverage buying and accumulation in the stock, which is something we look for. Also, we had a bullish divergence bottom back in November. So no more positives, and we're sitting right on the super support at that midpoint, which is also the 200-day moving average.
What's your option strategy?
So the way to play it, I'm looking at a June option. June option has 5 months of time. June option, June 45 call, which is here that support. Look for it to break back out with a target at 65 with 5 months for bullish development.
How about your trading day takeaways before you take off?
All right, let's talk trading takeaways. Trading takeaway number one, we've got price, pop, power. The PE ratio, which is the price of our stocks, is sitting around 20, which is still a long cry from the 23 high. We have 2000, so we're about 15% below in the PE versus the price. Number two, earning it. Earnings season, we're about 3/4 of the way through right now. And we've seen a doubling of the earnings estimates. So they were looking for about 1.5% earnings growth. We've seen 3%, so that's very much a positive. And takeaway number three is 4+ more score. All right, so our earnings growth numbers expected for the next quarter are 4%. Then after that, it's 5%, 5%, and 5%. So things are looking up for go growth.
Thank you, Alan, for your always upside views.
Thank you.
Go to businessfirstam.com for where to see our show on TV.